What a move, what a day. Hope you guys had a great hump day out there. Welcome back. Wednesday evening, May 18th, 2022. My name is Joseph. As always, welcome back to your nightly newsletter. It's Wednesday evening. We're getting ready for Thursday's trading session. We have a lot to cover here tonight. Got a bunch of trades setting up for Thirsty Thursday on our radar for tomorrow. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money. As always, before we jump in and get these charts going here tonight, make sure you subscribe so you don't miss tomorrow night's video. And if you enjoy the content, hit that like button for me. Appreciate you guys spending some time tonight with me. But enough of the intro, right? Thursday is right around the corner, and judging on the size of the move we saw today, we should have plenty of trade setups to look forward to tomorrow. Big moves down across the board. S&P makes a just bloodbath, right? Overall, earnings reports come out in the pre-market from places like Target and send the market into a tizzy. Big move down for the S&P, big move down for the Nasdaq. Not as big of a move, but a very considerably large move down for the crude oil. Anytime we see really big moves in one day, there are two very specific scenarios I want to make sure you guys are ready for tomorrow. That's where the money will be. So tonight we're going to cover the two most specific scenarios, pretty much for all three of these markets, and we'll show you guys where the easy money, where the low-hanging fruit is going to be hanging out here on Thursday's trading session. Before we get started, though, speaking of Thursday, let's not forget what the schedule looks like for tomorrow. We have three major news events for tomorrow. We've got the jobless claims and the manufacturing number coming out right at 8:30 Eastern time. I would not expect that jobless claims to have too big of an impact. I would imagine the Philly Fed manufacturing index to be the bigger of the two events tomorrow. So keep that 8:30 number on your radar. And if I had to guess which of these news events would have the potential to trigger another big move, I would definitely suggest or assume it's the existing home sales number. As I mentioned earlier on this week, we are watching for any of these big news events to begin to show signs of cracks, right? We saw some pretty strong retail sales. We saw some pretty strong housing starts. We're going to see if those existing home sales numbers, if they're going to start to pull back here amidst record high pricing in the housing market, and interest rates here on mortgages are at 11, 12-year highs right now. So that one has the potential to really get these markets moving here tomorrow. But definitely these two blocks, 8:30 Eastern time and 10 o'clock Eastern time, those are definitely the numbers, that the times of day you want to be at least at your desk and ready for some market moving events. We get a Fed speaker tomorrow. I wouldn't expect Fed speakers will impact these markets too much right now. They did a pretty good job last week telling us exactly what their game plan is at the Fed, hiking up those rates consistently at the next few meetings. 8:30, 10 o'clock, those are the big times to keep on your radar for tomorrow. If I had to guess tomorrow, I would guess that 10 o'clock to 11:30 block will probably be where we get some of the juiciest setups in our trade room tomorrow morning. Back to our charts though, S&P, Nasdaq, crude oil. Now remember, whether you trade one of these markets or you trade all of these markets like we do in our trade room each day, I'm going to cover my favorite trades on each one of these charts. That way you have a game plan to make some money tomorrow. You're going to learn something new throughout the entire video here. There'll be learning opportunities, earning opportunities. It'll be worth your time if you're a serious trader. Make sure you watch all the way to the end because there'll be new tidbits. And you know me, I like to wrap it all together and save the best till the end of these videos. So I'll give you a reason to stick around all the way to the end. So we're going to go 1, 2, 3. We'll finish up on the oil here tonight. We'll wrap it all together. Let's jump in first here, as always, with the E-mini, the S&P 500, or of course, if you trade the SPY. I know a lot of you guys like the ETFs as well as I do. So E-mini, S&P, this of course will also apply to any SPY traders out there as well. What's the most important factor here right now on the S&P 500, or of course the SPY? There are really two big important factors. One is it's a very strong move. Anytime we see a very strong move in one direction, we expect to get a relatively deep pullback and a retest of, in this case, of that low. We saw this yesterday. Anytime we see a strong move in one direction, we expect a deep pullback and a retest, in this case, of that high. That was one of the big reasons why we said last night, which way do we go, right? Do we break higher or do we collapse and run lower? Obviously, I don't think anybody expected us to get this big of a collapse, but we definitely kind of anticipated the potential for for a reversal back down to that 4,000 number. Bottom line is it's a very strong move. We do expect sellers to be looking for ways to sell at resistance levels overhead. I have a couple levels I've got marked up on my chart. One I really like is that prior low, which will give us a nice juicy, nice risk reward on that short side. The second thing you want to kind of think about with this is this is not a small move. This is a very large move in one day. Anytime the market makes a big move in one session, we always expect to see either a trading range the following day, like it seems like we're starting to get right now, or a deep pullback. Now, why a deep pullback? Well, because there really weren't that many there was 0 deep pullbacks today. So if you let's say, for example, you had a dentist appointment today and you missed this entire move down, you come back tomorrow, and do you really want to sell way down here? Probably not, right? You'll want to sell at a higher price. And so whenever we see a really large move in one day, we always expect that we're going to try to get this deep pullback to attract more sellers into the market. This is the same idea back here. Again, that's a really big move overnight. Is it surprising that buyers were waiting to buy the deeper pullback at a prior level of resistance? Not at all. That's exactly what we're looking for here with levels like this one here at that 39.80 area. So we're literally trying to accomplish the same thing we had yesterday, but of course, right, in the opposite direction. So we got a range we're expecting a deep pullback. We might even see both of them happen at some point tomorrow. Also be aware too, both the Nasdaq and the S&P, we got prior week low is right there. So there's still a very good chance here right now this market may continue to bleed out here on the way down to that area. So don't be surprised if we see more bears come into this market as the Asian markets open in a few minutes. At the same time, too, I really like the idea of a deep pullback, rope in some of those sellers, and shoot this thing back down to take out that prior week low. That would probably be one of the best scenarios we could hope for here tomorrow. So let's put the game plan together. How do we buy it? How do we sell it? Where's the money going to be made here for tomorrow? So again, the Nasdaq and the S&P are very similar on this. Let's talk about the range first, because the range you can see here it looks very likely here right now. This channel, just really, I mean, this channel is a great idea. There's probably a couple other ways you could draw this channel. You know, that one seems to be a little bit too big to be realistic right now. So in all reality, you know, I'd love to have some magic channel on here for you, but these types of moves are so impulsive, they're so emotional. It's very difficult to really get a channel that will work on this to really find the best pullback. The bottom line though is you want to be ready for a trading range at some point here tomorrow. There are really 2-3 different ways you want to look at to trade to trade a range. First of all, if this range does hold up, and it looks like the range is there right now. We'll see. It may go lower and go sideways. Just be aware this trading range may be a little bit lower when we actually start trade on this stuff here tomorrow morning. The reality though is we want to find levels of resistance above that trading range, and we want to sell as we're going back up into it. Ideally, I want to sell into those areas of resistance. I want to look for shorts on the way back into the range. And then here's the kicker. If we break through that low, I can look for breakouts going lower. Those are kind of the 3 components we look for when a bear market turns sideways into a range. We're selling the pop up into resistance. We're then selling it as it goes lower back into that trading range. And then we're looking to see if we can sell it as it punches out the other end, hopefully back down to that prior week low. So here are some ideas here for us as we pull back. The first one is, if I can get up off these lows, what I'm hoping is I can go in and rope in some of these buyers. When I was a new trader, I always made these foolish decisions looking back on it that the market had kind of gone too far. You know, there'd be some weekly, some weekly pivot would be right here, and I would make some fantasy about why I should buy that thing at that point. A very common rookie mistake. I made that mistake a lot of times, unsuccessfully, of course, as a new trader. So if I can get this market to pull back a little bit, remember, there's been 0 pullbacks here so far, right? There's been literally 0 pullbacks there. So if we can get that pullback right now, I'd love to see if we can rope in some of these buyers, use their stop losses for fuel, basically, and look for that short going back down into that trading range. Now, one of my favorite kind of add-ons onto this is to grab a trend line, mark it off that low, bring it up top and mark it off that high. That creates a channel, and then look for a short off the top of that channel. Like I said before, right? We're selling it as it goes up into resistance. I like to use my failure setup to do that. And then we're also selling it as it kind of rolls over and tries to run back down into that trading range. And of course, we'll use pattern entries like traps and failures and pullback setups off the high of that channel. That would be one option as we go higher. Now, ideally, I'd like to go even a little bit further than that. I'd like to get up around that 39.80 area. That would really be probably the best place to short. So if we do see that really deep pullback, let's say it spikes up at the open as bears get out of their short positions, take some profit because it's a big move, right, going lower. There's a very good chance here when this market reopens, it will pop up here as all those bears who undoubtedly held their positions until the closing bell, they begin to take some profit as the market reopens. If we pop up significantly off of that low now the strength of that move, remember the strength of that move is a big factor. Why? Because anytime we see a strong move in one direction, we have to respect that momentum and expect a retest of that high. Knowing that, we want to give the buyers 2 tries. Let them try once, let them try twice, and then think about where their stops are. That's where the money is right there, right? Once those buyers are trapped in on that pullback, remember, big move down, retest that low. There's a big magnet wants to drag that price back to that low. Once those buyers commit on the pullback, now we know where their stops are, and we can look for that short going back lower. Now remember, these are the best ones because now you have all that open space on the way back down to retest the low. So don't just kick your feet up on the desk and bask in your amazingness of that big short you got. Mark up that low, find a channel high, and then you know me, I always like to drill down, find those little trap levels, and grab what we call a first test trap before we retest the low of that trading range. Now, guys and gals, I know a lot of you have already taken the free trading course on the website. You learned all the failures, you learned all the traps, you know the rules, you know what they look like, right? And I get so many great comments and emails every week right now about so many of you guys and gals that have taken the free class. You learn the setups, you're making money on your own, getting ready to join us in our trade room. But listen, if you're here for the first time right now, if you're one of the few folks who haven't taken the free course and learned all the setups, there are hundreds of examples of failures and traps in that free course. I'll put a little link up here for you in the upper right hand corner. Grab that little pop-up, pause the video, and get registered for that free trading course. You'll learn the entire roadmap we use in our trade room, how to find all the right levels of support and resistance, the ones you can trust, how to time the entries, as close to perfectly as you can with those entry setups we keep talking about. And there'll be hundreds of examples of how we apply those setups to our favorite markets. So definitely grab that link in the upper right hand corner. If you're like me and you hate missing the best trades each day, or you're taking too many losses, that free trading course will get you back on track and get you a game plan to start making some money on your trade account. So now we know how to trade this thing. Now we know how to trade it if it pops up, right, and then comes back down again. How do we trade the breakout going through? How do we trade the breakout going through? Okay, this is the one that's a little more tricky, okay? So now, let's say, for example, we get that pop up. We pop up, failure, whatever we get up here, and now we start to spit our way through. At this point now, we have to see really what you want is you want one of 3 types of breakouts. You ready? One of them is the easy one. It's a 1, 2, 3 breakout. Basically, once we retest that low, we have to then hold that pullback to the moving average and jump off that moving average. We have to really violate and really push through that range low, right? Now, the good news is we already have a lot of momentum coming off that high. So you can be pretty aggressive on these when they're going with that momentum, right? Remember, for example, let's say, for example, the market spits lower now, right? You wouldn't want to be so aggressive now, right? Because there isn't a lot of momentum at that point. But if the market was to go up and then come, right? See, now that momentum's a lot stronger. That's why I say you could be a lot more aggressive on that. So if we can get this to go up, get up and then back down, take out that low. Sorry, it's such a messy drawing right now, but I'm trying to save time here for us. And then hold that pullback and jump off that moving average. That's what we call a 1, 2, 3 breakout pattern. It's a very, very simple breakout pattern. Now, mark that low, mark that high, find those traps, and grab that trap. Now, I say trap. Any of our entry patterns will work. Traps work great. Failure patterns above the moving average work great. Pullback combinations. You're going to learn more about that stuff, obviously, in the free trading course, right? So it's that first test off that new channel, right? 1, 2, 3 breakout going lower here. Makes sense? Okay, that looks good. Now, another one. This one I love. Let's say it goes up, comes crashing back down now, and now we go into that pop and grind. So we go up, we come down, and now, instead of pulling back and blasting, now it kind of grinds down, right? That pop and grind is a big, big giveaway. I can mark off that low, I can mark off that big high, and I can grab that first test off the high of that channel as well. Maybe it's a trap, maybe it's a failure, right, off the high of that channel. That is a great one as well. That would also be something you could use right now, right? Let's say it kind of pops lower and grinds down like that. That's also something that you can use here, right? That kind of pop and grind as we go here as well. That is something we can use as we go lower. Love those little pop and grind channels. Another one here, one last one here, then we'll go to the Nasdaq here. We go up and we really spit. Right? We really punch right through that low. It goes up and then literally just dumps, right? Punches right through that low. Repeat after me. Strong move, shallow pullback, lower low in price, traps, baby. That's a great setup as well. So you notice how this one's a little bit different, right? This one requires a very strong punch. It's not the up, pull back, and go, right? That's a 1, 2, 3. And it's not the up, back, and roll, right? That's the pop and grind. See the difference there? All three of these are very, very useful, right? And we'll find most likely one of them at some point here tomorrow. So definitely keep your eyes on that. So that's how we trade the pullback. That's how we trade the reversal or the drop, and we trade the breakout on the other end. Now, we got a lot more to cover here on the Nasdaq. Let's keep going, right? This is obviously just scratching the surface here, talking about how to trade a range on the S&P or the SPY. Let's go to the Nasdaq here now. Nasdaq or the Qs, right? The QQQ is the ETF counterpart of the Nasdaq. I know a lot of you guys are trading the QQQs. What's the most important thing in Nasdaq? Same exact thing. Same thing here. We have a market that made a very strong move today, which suggests, of course, that a strong move will pull back and want to retest that low. We also, of course, had a very large move today, which again suggests we either get a trading range at some point tomorrow, a deep pullback, because after all, we need to attract in some of those sellers, right? And if we're lucky, we might get both of them. If we're lucky, we might see both, see a range and a deep pullback, like we mentioned there on the S&P. Just like the S&P, I really like some of these prior areas of support. They would make for probably the best possible short for tomorrow. We'll see if we can get it. That's quite a bit to ask here for a market that has simply collapsed here today. But again, very possible for tomorrow. So I like those areas on those deep pullbacks. And then, of course, if we do go lower, remember, we got that prior week low right there. So you just got to be a little careful if the market does bleed lower here right now, again, because of that prior week low. That will be a definite objective here for us tomorrow. So we're going to keep an eye on the ranges. We definitely will keep our eyes out for these sideways ranges. I would love to think that this channel will be the magic channel. I like the way the channel looks, but just be aware when a market literally takes a nosedive like that, when it kind of bleeds out like that, it's, again, a lot of this is not very technically sound. You know what I mean? There isn't a lot of technicals you can use on a day like today because it's all just emotion, right? It's all just fear that runs this whole thing. So at this point, we're trying to get enough of a pullback right now to rope in some of those bears and the buyers. Now, we talked about the range on the Nasdaq, so we can apply that pattern setup on the Nasdaq as well. There are three basic types of pullbacks that you want to think about on a real strong bear trend. And again, this will all apply to the S&P as well, and for the most part to the oil too, in all reality. There are three types of pullbacks that you want to think about here right now. One would be getting up, trapping in those buyers, okay? Remember, anytime we see a strong move, getting those buyers to come in and try to hold that pullback. Once those buyers come in and try to hold that pullback, you know exactly where their pain is. You know exactly where those buyers know they went wrong. And that's exactly where you can look for that short going back down in. I'm not a big fan of trying to pick that top, because oftentimes you'll sell that top, put your stop right above that high, it'll come right back, stop you out, and then drop right back down again. I found it a lot easier when I was a new trader, rather than trying to pick that top like a precision entry there. It's just much easier just to wait for the pop up, wait for the buyers to try, and then literally sell right into their pain. Because once those buyers get stopped out, they become sellers. Then you got sellers selling, you got buyers selling, everybody's selling. And again, I would love to think that channel will be a good spot for it too. You know, we'll see. Again, I wouldn't hold your breath on that channel. The other two are the ones you want to really hope for tomorrow, and that would be a deeper pullback. Now, when it comes to a deeper pullback, one of the most common things you're going to see is something like this, where it'll pull back, it'll try to go lower, and then go higher from there. In this case, you want to draw a trend line up off of that low, right? And that trend line is kind of your best friend when it comes to that short going back down. So I want you to keep that in mind if we get that really, really, deep pullback here like we hope we do. Watch that trend line. What you kind of want to be careful with is when you look for setups and you're trying to trade directly into that trend line, it can really, what can happen is it can kind of grind up that line for a while and make your life a little bit painful in the meantime, right? So that trend line is a very useful tool, and it's very, very common when we have these deep pullbacks here, and we got to get underneath it and try to use it for that short. And that reminds me now, of course, that brings me to what we really hope we get tomorrow is that really deep pullback. Get those buyers to come in, let them try a couple times here. Remember, this one is a lot stronger, right? This is a lot deeper pullback. Okay, that stronger move wants to retest. And so that's why we like to let them try twice to kind of, give them the benefit of the doubt. Then they have their stops sitting right below that low. And again, if you're a buyer and you're getting stopped out, you by default are a seller now. And of course, the bears are selling off this area. The buyers are now sellers. And remember, the reason why these are so attractive is because of that huge amount of reward that's still waiting for you there, right? The risk-reward ratio is primo on these types of deep pullbacks. Unfortunately, deep pullbacks, they come with a cost, right? And the cost is momentum, which is why we let them try twice. Now, once this market or once this trade triggers short, okay, and you'll learn more about kind of the triggers here in that free video course I mentioned earlier. Once this trade triggers short, now as we drop now, this is where the fun starts to happen. This is where we start to look for those channels off that low, up around that high, and we start looking for those first touches of the top of that channel. Again, I love traps, but as you'll see in our free trading course, a lot of times these are failures or pullbacks off of that low, and we know where we're trying to go. We're trying to go back down into that trading range, right? That makes sense? Now, by now, maybe you're wondering, how do I buy this market right now? Is there a way I could buy this? Absolutely, there definitely is. The buyers can buy off that low now because now the sellers will have reached their objective. Okay, the buyers can definitely look for a double bottom reversal there. And if we do our job correctly, we can look for a reversal coming in here as well. So let's talk about that. You got to be very careful with it. Again, remember, you've got to anticipate there are going to be a lot of bears waiting up around some of these highs up here. So a strong move going higher here, in most cases, if I see a pop up, the buyers come in and jump off that moving average. In most cases, that means we have a reversal. But because of the size of this move today, you really got to be careful buying into that first pullback. Remember, if you watch this video every evening, you know I love those quick reversals in that first test. But again, remember the context of the situation we're in right now. I believe, at least at this point, you're walking right into a lot of bears up there. And so I think the best thing for us to do is really wait to get up into some of these areas here. At least get above this level right here, right? At least get above, some of these really deep traps here. That 134 area is a good example, right? At least get above this area. Let's get those buyers, show me you want this. Show me you can really reverse this big move, hold that pullback, and give me a nice punch right to that high. If you can do that, you definitely convince me, right? But again, if they try and struggle for a couple times, now we're probably heading back down to retest that low. This is that 1, 2, 3 breakout pattern, or reversal pattern in this case, right? Lots of 1, 2, 3 moves we use in our trade room, and then we'll mark up that high, we'll mark up that low, and again, we're going to drill down, try to grab those traps, get below the moving average for a failure. Failures love to turn into pullbacks, and we're going up from there, right? Where do we think this market wants to go? I've got that 436 area. That's that range from yesterday. The market would love to think they can take out that big high. I'll believe that when I see it. Is it possible? Sure, it's possible. Is it probable? Doesn't seem very probable for tomorrow, right? With such a big move down here as we go lower. So we know how to trade this thing as it reverses. I would also think if this market was to really pop and then begin to grind, those pop and grinds, that grind would be basically a short covering rally, basically, right? It'd be all those bears who got short over here, they're getting out. So maybe something does happen overnight. I don't know, right? I'm not in the prediction business. My job here is not to tell you exactly what's going to happen. My job is to say, listen, if this is what we get tomorrow, this is where the most reliable trades are going to be. That's the way I run my career. It's done me very well over the years. It will do you well as well, right? We're not trying to predict what the market does. We know what's likely. We know where the best ways to trade each thing is. You get the point. So if we pop up and grind, we simply grab a trend line off that high. We then drill it down to that big low, right? We try to find those hidden channels. And now, at this point now, looking for those traps, trying to get underneath prior swings, trying to get that, right? Trying to trap in those bears and poke it right back higher as well. That does seem to be, a very good possibility. For some reason, the market says, you know what? We got it wrong today. We're going back up again. They pop up. I would imagine that first pop, a lot of times what will happen is these markets make these big moves in one day. A lot of professional sellers, they won't even take their profit. They'll literally hold it all the way to the close. And they'll simply put a buy order in, right? Once the market reopens, it'll get them out for wherever it closes. So that we oftentimes see that little pop right at the beginning of the Asian session. And then from there, it's do we roll back down again, right? Or do we hold as the rest of those bears get out and run higher? Is that making sense? If it does, hit that like button for me. If you're enjoying the video right now, appreciate it. As you can see, though, it doesn't look like we're getting that big pop here right now. One more thing here. What else can we do to buy this market right now? Can we buy off that low? We definitely can. Remember, we want to sell that pop and back down again, right? Can I buy it now off of that low? You definitely can. But remember, though, what's the problem? The problem is momentum. There's a lot of bearish momentum right now. So yeah, it's good that we're at the low. It's good that the bears will have mission accomplished, right? They will have accomplished their objective. Remember, like back here, The buyers had that strong move up. They come back, they retest the high. And then remember what happened? We mentioned this last night, right? The buyers try a couple times and they fail back down. That two-try failure, the exact setup that we talked about 24 hours ago, is the exact same thing, right? We end up going up. Buyers try a couple times, they fail. What do? You grab that trend line, you find that channel, and you grab your first test is the best test, right? This is the same thing we talked about last night, 24 hours ago. So again, if we make that pop up, we get our short, we go back down to now retest that low. What do we do now? We don't buy it. We have to wait and see if those sellers are gonna basically wrap that noose around their neck. Remember, the smart money is selling up here. The smart money knows to filter their trades for risk reward. Risk small to earn large. Anyone trying to sell down here now in this condition is considered to be the weak hands at this point. Right? Because again, you're too late to the move. You can't risk small to earn large, not in this specific type of market condition. So when those weak hands, when those inexperienced traders, when the traders who don't understand how the markets work just yet, they'll get there. We have to pay our own tuition to the market somehow. Once those bears try once, try twice here, now again, all their stops are sitting right there. I love this trade, this kind of double bottom reversal, rope in those bears and then punch it right into those stop losses. Now, where does the market want to go at that point, right? That two-try failure. It wants to ultimately go take out that high, ultimately. You know, its fantasy would be to go all the way back up to that area, right? But again, their kind of their immediate objective is to go back and retest that high. And so before we get there, now we can go out, find that new channel, and we can trade the turn, right? Trade that turn. Grab that first test off the low of that channel. Okay, most important thing about that is to make sure this little pop gives you a nice little juice to it, right? Nice little pop off that low. Find that new channel and then be ready to grab that. And again, a lot of times these will be traps or seller failures as the bears come in, try to get short back down again. You're literally using those bears, their stop losses, to punch this thing right back up to retest that high, that medium term high. All right, guys, got a couple good options there for being a buyer, right, and a seller on this one. Now, what if we keep going lower? What's the game plan here if we keep going lower? Let's talk about that more on the crude oil, because oil, as you can see, is quite similar, right? So what if we do keep going lower here on the S&P, on the Nasdaq, or on the crude oil? What's the game plan for that? Well, over to the oil. Now, a lot of you guys and gals may trade the USO, right? The USO is the ETF counterpart. I have a lot of students in my trade room. They'll trade the CL, the micro CL, right? The micro crude oil, or the USO. You know, they all use the same basic strategy, right? The same basic strategy we teach in that free trading course and the stuff we use in our trade room. What's the most important thing right now on the oil? I think the most important thing is a strong move, right? It's a very strong move. There's been almost zero deep pullbacks. Only pullback we saw today really was, right, well, at least the one in the morning session. This is the pre-market. All we got was that inventory report. Right, we had that 1030 bounce as we went kind of rolling over there. Everything else, though, not much of a pullback, though, or a retracement for all the fine folks out there using the term correctly, right? So no bounces, no retracements, no pullbacks. So we have to think that any pullback right now will likely be seen as a good selling opportunity, right? We have to think that. And so we're looking at areas of resistance, prior swings. Love this channel. You know, I mean, how do you not love that area right there? I mean, come on. You got to think a lot of bears would love that spot. So do I. So I think that's a good spot to keep in mind as well. I think another key component on this chart is this spike in channel. Now the NASDAQ and the S&P, they kind of have variations of this, but this really does look pretty good. See how it spikes down like that and it starts to kind of grind down? That's called a spike in channel. Spike in channel patterns are one of my favorites. They should be one of your favorites as well, because they pretty much tell you the base of that channel, right where the channel and the spike come together. That's usually where the money is, right around that area right there. So bears may only get that shallow pullback they may only get that shallow pullback. So sellers want to sell high. They want to sell as high as they can. Obviously, buyers would love to kind of rip this thing off, and run it back to those highs. Doesn't seem likely right now, but hey, it's possible, right? Buyers would love to hold that pullback and reverse this. Buyers would also love to get one of those double bottom reversals we just talked about. Again, that will also apply on the S&P as well. So buyers definitely have potential here. You'll notice one thing about oil, though. We are sitting, unlike the other two we've talked about tonight already, the S&P and the Nasdaq have a little bit more space to run. You'll notice the oil, we're kind of sitting right here. This, of course, being a weekly low. Yeah, so that's last Friday right there. Monday, Tuesday, Wednesday. Yeah, so weekly low. We're right there right now. Now, I would think that if this market could push to that weekly low, you've got that, there is, I would say, probably the most magnetic range we have on oil is right around 102. Obviously 103 to 101.5 area, but 102, if you look at any big long-term time frame in the oil right now, there is so much overlap around that 102. All the volume is piled up around 102. So that's definitely where this market would like to get to right now, I would imagine. Obviously the 100 number is a big round number, big magnet, but that's a lot to ask for here in one session tomorrow. So if we can punch this low here, that 102 area does seem to be a very realistic objective here for those bears. But we know the game plan here already, right? We've covered a lot of this already on this. We know that we'd like to get that pullback. If we get that, relatively shallow pullback, it's a simple failure, and that move back down. If it's a relatively deep pullback, what do? We watch out for that trend line. Remember that trend line thing? Watch the trend line so we go higher here. And again, those deep pullbacks are great, but they come at a price. The price is what? It is momentum. Let them try once. Let them try twice. My stops, my pain is right there. I can sell into that pain point. I can find that new channel. And this is the pullback that you don't want to miss. I tell this to our students all the time. It's okay if you don't feel comfortable taking that failure. I get it. A lot of times it's very strong on the pullback. It can be scary to want to sell into that when it feels so bullish. But there's one trade you really can't afford to miss each day, and that's that follow-up, that first pullback. That's the one you really got to be on the ball for, because that's all. I can't say guaranteed. Obviously, nothing's ever guaranteed. But that's almost a guaranteed winner as they go rolling back down, because everybody knows what's going on at that point, right? So definitely keep an eye on that. If we pop up, and again, if these buyers can hold and blast through, there's that 1, 2, 3 reversal. We find that new channel. We grab that first test. Where does the market want to go? We know where they want to go. They want to go right back up to that big area from today, 112.15, 112.80. If they're really on their horse, that big top up there at 113.83 is kind of that is the wet dream, right, for the buyers here at some point tomorrow, right? So keep that in mind. Or a short squeeze, right? Pops up, grind. Remember, the grind is a huge giveaway. The grind tells us the bears who got in over here are now thinking, wait a second, maybe we did something wrong, get me out. And that's what causes that grinder. Pop off that channel high, find that channel low, look left, find those prior swings. Where's my moving average? Get underneath the moving average. Why? Because when you get underneath the moving average, it fools people into thinking we can sell at this point. And once they do, you got them right. You got them right where you want them. They back themselves right into a corner. They can't get out without getting long, and you'll be right there to take this out of that trade from them, won't we? Yeah, absolutely. We know where the market wants to go at that point as well. So we've got that all covered. Again, don't forget, we could easily go sideways here at any point tomorrow. Remember that pop, that failure, find that channel, and remember that punch, right? Remember those 3 breakouts we talked about at the beginning of the video? Yeah, that's where you want to apply them as we punch down to that 103, 102 area we mentioned before. What if we keep on bleeding lower? Again, this could easily go for the Nasdaq, the S&P. What if we keep on bleeding lower? What do? Do we buy it? No. Do we sell it? No, not yet. Remember, nothing has changed yet. If we keep on bleeding lower, literally same thing, right? Same thing. Keep looking for those prior swings. Keep popping up. Keep grabbing those failures back down. Or if it really spikes, 1, 2, then back down, right? Okay? So if it keeps on grinding down like that, just wait for that pop up and keep looking for those shorts off channels like this, off prior resistance levels overhead. I'll obviously make sure we know more about this tomorrow, obviously. And remember, if it does just drop like this, keep your eyes on those ranges, because it's very, very likely if it really chunks down like that, we'll probably see it start to trade sideways there. Or again, pop, grind, find those channels. You got it. So the piece we've talked about today, all right, that'll give us everything we need here to buy these markets, to sell these markets here for tomorrow. I'm excited. Usually a big move today means there's going to be a lot of people hunting for discounted prices tomorrow. So keep your eyes open tomorrow morning. Again, we get some big news tomorrow morning, just after the open here, 8:30 and then 10 o'clock Eastern time. Should be a good day tomorrow in our trade room. Speaking of our trade room, if you're looking for a great place to learn and trade along in a nice, fun environment, I have all the worksheets, all the software templates for you. All I need right now is for you to get registered as a new student. I'll put all of the membership links, all the free course links in the description of the YouTube video. So grab those links, take the free course, learn the basics. You'll love that. That'll get you going, and it'll get you on the right track in your trading. And then I'll be waiting for you to see you in the trade room with us every morning, 8 o'clock Eastern time. Don't be afraid to call the office. I'm always here to help. If you guys have any questions, I can answer questions about the best brokers, data feeds, charting packages, or anything that you might have questions about. So don't be bashful about calling with questions. And as always, you can drop those questions for me in the comments section below. And hope by now you've hit that like button if you guys enjoyed tonight's video. Thank you so much for watching all the way to the end. If you're still watching this video right now, I'll tell you right now, you are the person I do these videos for. If you are dedicated enough to be watching a 40-minute video right now, I commend you. And I'll tell you right now, if you have the dedication to watch this entire video, you got to find some way to get into our trade room, because the amount of effort that you're willing to put in this far, I can only imagine how far you'll take this with us when you have all the tools and you have me at your disposal during the real-time markets. So call the office, get registered, and I'm always here to help out in the comments section if you guys have any comments along the way. In the meantime, though, let's get some rest tonight. Busy day coming tomorrow, hoping for some ranges, some deep pullbacks, and we'll see what we get here in the overnight. As always, my name is Joseph. Be well out there, will ya? Be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.